Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkine.
Property has increasingly become an extremely important investment tool for Australians looking to get ahead. What was once viewed as part of the Australian dream, to own a home with land, is now increasingly out of reach for many young people. But it's also increasingly becoming a source of ongoing wealth for those who can afford it. But like any investment, whether it be crypto or traditional stocks, investors need to tread with caution when entering into the property market. So here are 3 different points of caution to keep in mind when doing so. Firstly, what do you seek? Is it capital growth or rental yield? Capital growth, as we know, is all about first investing in an asset and then liquidating it if there is someone willing to pay an appreciated price. Capital growth in property can take time, and this depends more on macroeconomic factors like wage growth and inflation. If the overall economy is inundated with money, one can expect quick capital gains. Rental yield, on the other hand, is a hold the asset kind of deal. Here, the purchased property is not liquidated but rented out for regular income. The big question is, what do you seek? Ask yourself, because there is a lot that must be studied based on this decision alone. If one is going for rental yield, then you'll need to know what the average rent in the neighbourhood is and whether it justifies the purchase price and mortgage costs if there are any. Secondly, should you be looking at a house or an apartment? No 2 types of accommodation, no matter whether the prices of both are the exact same or not, usually fetch the same rent. That's according to property market experts. The rent of a penthouse apartment can differ wildly from that of a house, even when both properties have the exact same market price. This is one reason why an investor must fully understand the utility of and expected return on an investment from different types of accommodation, and they must do so before they take the plunge. And thirdly, market price versus overall cost. Now, one can tend to overlook the fact that the market price of a property is one thing and the overall purchase cost is a whole other thing. The latter, besides the price of the house, includes stamp duty, or what some may call land transfer duty, the legal fee which is charged by the solicitor, building inspection costs, insurances, council rates, and much more. We must always know what the complete deal is and if the overall purchase cost was to exceed our budget and jeopardise our financial health, because if it does, it would definitely be better to look for an alternative deal.